Welcome everyone to this panel discussion hosted by SIAS. It's the final day of the Singapore Corporate Governance Week 2024. As we mentioned, my name's Alex. We've already introduced the four incredible panelists who are going to be joining us for this discussion. And as mentioned, we're going to be engaging with the prospects for growth and innovation in the green investment space, as well as potential hurdles companies may encounter on the way. And the panelists will be sharing their insights into how to navigate these challenges effectively and capitalize on the vast opportunities presented by green investing. We already had an introduction to the panelists, so we'll get straight to it. Welcome to you all, and thank you for taking the time to be here on the panel today. We're going to get the presentation from each of our panelists, followed by a discussion. If you would like to suggest a question, as mentioned, just please type them in, and hopefully we can ask some of them to our panelists later in the discussion. With that, why don't we start with Helge for the first presentation of this session, if that's all right.
Yeah, cool. Good morning, everyone, and great pleasure to be here. Thanks for having me. The good news is I don't have slides, but maybe just a quick note. So I'm Helge, Group Chief Sustainability Officer at DBS, which really is a central strategic function where we help senior management to develop strategies around sustainability. And I'm a very simple person, so I thought I'd start simple, because I'm sure we have a lot of time to go into the technical details and weeds of green investing and so on. But I thought I mentioned two things as I was reflecting on the theme today, which is around green investing. So two key points. The first one, why are we doing all of this? What's actually the purpose? And I think in sustainability, ultimately, we only want to accomplish two things. Number one, we want the people that live today live well. And we have around 8 billion people. And secondly, we want our kids and grandkids and their kids in the future to live well. That's really it. And live well means a lot of things. It means we have food on the plate. It means we breathe fresh air. It means we have clean and safe drinking water. It means we get medical treatment if in need. We have shelter. It means we recharge the batteries and enjoy nature and have a nice walk in Bukit Timah or MacRitchie, meeting families and friends. And I say this because we talk about green investing today, but there is a broader context that is really important and very relevant to all of us, really understanding the purpose. And we in Asia need to create our own story. We need to own our narrative. We are different, we are unique. We can't have others tell us how to transform our societies to accomplish this overarching purpose. And there's very specific work that we all actually do on developing this Asian narrative and developing Asian pathways. And later we can talk about this in more detail. And I finish off by saying this is not just fluff. It actually has implications on how businesses run their business, because there are certain risks they need to be aware of. There are certain opportunities they will be able to reap. And that then directly has an implication on investors and how they assess these businesses. So we're going to dissect that a little bit later, but that's an important part. The second message is that these challenges that we face to achieve the overarching purpose are quite daunting. They're really, really very significant. And nobody can really do this alone. We need an all-of-ecosystem approach to this. An ecosystem is defined as there's government and regulators, there's the private sector, there's the finance sector, there's the community at large. And all of us have a specific role to play in this. And this means two things. Number one, indeed, nobody can do this alone. There is no way that, for example, financial institutions can magically change their capital allocation and all of a sudden the world is a better place. But secondly, it means that all of us have an accountability. So we can't wait and point at somebody else and thinking that they could do this. And later we can dissect a bit how we do this as a bank and what our role in finance is. Thank you very much.
Thank you, Helge, for that. How about now we turn to Ms. Eric Lim for your presentation.
Thanks, Alex. I'll build on Helge because DBS UOB were both universal commercial banks, so very similar themes. I'll build on that. So for those of you who are familiar with us, UOB is very ASEAN focused, right? Despite being a Singaporean bank, a lot of our strategic focus is figuring out how we connect Singapore, into the ASEAN region, and this is a very valuable capability as we start to talk about sustainability and the value chains and supply chains of how we finance and build the low carbon economy for the future. What I mean by this is if you think about a lot of the resources that are required for the low carbon economy, be it a lot of the raw materials for electrification, or, I'm sure Siew Kim's going to talk about the concept of embodied carbon within our construction and built environment sectors. ASEAN is very rich in a lot of these resources, right? We are also within ASEAN, a high GDP growth area of the world. So there's a lot of capital that is very interested in flowing into our part of the world. There's a lot of economic activity, new assets that are being built. So I think to Helge's point, which I really like, there is a huge amount of economic growth and new assets that we can build right for the new economy, right? And it's important, therefore, we within the region chart our own path in terms of what sustainability and sustainable growth looks like. That's right for us, right? Now, we can't do this alone. This is obviously in coordination with global organizations, et cetera, et cetera. So one of the things we try to do with UOB is not only finance our customers, but provide some level of advisory on what works within the region, but what will also be seen as high quality and credible as we move outside the region into supply chains in Europe or in the US, right? And we're seeing it work. Similar to our peer banks, the sustainable finance numbers really have grown a lot. And the good news here is it's not only grown in certain asset classes or certain industries. We're seeing this diversification and proliferation of sustainable finance in multiple sectors, across multiple instruments, across multiple size of companies. So I'll kind of pause there a little bit and make sure my fellow panelists get the chance to provide summary, and we'll get into details later. Thanks, Alex.
Yeah, that sounds great. And I'm really excited to talk about stuff like that. Let's now turn to Siew Kim, and why don't you give your presentation?
Okay, hi, good morning, everyone. I like what Helge and Eric said. When it comes to sustainability, we can't do this alone. So really collaboration, partnership is key in this journey together. So hi, I'm Siew Kim, and it's really great to be here today to discuss this very exciting topic about green investing in real estate, and particularly in my case on the impact on the hospitality world. I'm the Chief Financial and Sustainability Officer of the Capital Investment Lodging business, which is the hospitality business unit of Capital Investment. I have a very unique portfolio, taking care of finance and sustainability, and I also have oversight over operations in Japan and Korea. So that gives me a very, very good overview in terms of what needs to be sustainable in the longer term while focusing on the short-term returns of our portfolio. So within the lodging portfolio in CapitaLand, there are three parts of the business. And the reason why I need to share these three parts is because then it gives you some context of where I'm sharing from. So there is a big part of our business, which is the asset-light part, the lodging management portfolio. In where Ascott actually manages properties for third-party owners. There are currently about 900 properties in our portfolio, and we have presence in over 40 different countries, over 200 cities, and across 14 different brands, of which most of you are probably familiar, like Ascott, Somerset, Citadines, Oakwood, or Life. And hopefully when you travel, you look out for these properties to stay with. The other part of our business is actually the real estate part. CapitaLand Investment Lodging is also a sponsor of CapitaLand Ascott Trust, and some of you may be unit holders of CapitaLand Ascott Trust. And that is the largest hospitality REIT in Asia Pac, and it has got 100 over properties with 8 billion of asset under management. So that part of business is really focusing on investment and asset management of the hospitality assets. And the third part of the lodging business in CapitaLand is on the private equity part. And that business really focusing on partnering with institutional investors to invest in greenfield or value-add lodging real estate properties. So as you can see, within this whole portfolio, we have opportunities look at sustainability across investment, across development, as well as across operations. So Ascot is a global hospitality operator, and we really, embraced the culture of care, hospitality, firstly to the people. As you know, hospitality is always a people business, but also to the environment where we operate. We are one of the, I would say, first hospitality company to receive the Global Sustainable Tourism Council, GSTC, committed status company, where it shows that we embrace sustainability in our operations. We operate across all the different countries where we have properties using this sustainability program that we have set up called Ascot Cares. And it's centered around the 5 pillars of community, alliance, respect, environment, and supply chain. And within each of these pillars, we set targets of how we want to, embrace sustainability in this journey. CapitaLand Ascot Trust, which is a listed REIT, thankfully received from SIAS this week the Corporate Sustainability Award for the REIT categories. And this award really honors business that demonstrate ESG sustainability, disclosure, and reporting. And CapitaLand Ascot Trust, actually, I would say, the first REIT in Singapore that published a sustainability report that has got its data being independently evaluated by a third party. So really, we are at Ascot putting forefront sustainability across our operations as well as real estate management. So very quickly, 3 key observations on the theme of today, which is on green investing. First, my view is a very, very strong growing importance of ESG investments. It's no longer just a trend. I mean, in the last 1-2 years, post-COVID, it's no longer just about talking, it's really about doing. So it's no longer a trend, but really I feel it's a critical driver of the future of real estate, because investors, like what Eric said, are increasingly prioritizing ESG criteria as one of the core component of decision making. Just like how, for us, when we do is we look at ESG criteria in the assets that we buy. Similarly, when we sell, the same, goes out to the investors that evaluate the asset. So while trying to, remain profitable for our unit holders, for our shareholders, for our owners, incorporating sustainability in our journey is very important, as that positively also affect the longer term returns and as well as a positive impact on the environment and society. So that's first. Second is, I'm also seeing a lot of opportunities in green investing. So companies that capitalize on these opportunities through their development in sustainable buildings actually sees higher return, higher rental, and really being able to attract a lot more eco-conscious tenants or guests or investors. And lastly, like what Helga said, innovation is everything in sustainability. So innovation in the last 1-2 years is driving the change in this space. And innovation, collaboration is really the heart of green investments in real estate, as well as sustainability journey. In green buildings, there are a lot of technologies that's been implemented or we've seen in the last 1-2 years that have a very positive impact in how we look at investments, development as well. So we'll talk more about that later. But maybe I'll just wrap up with another 2 key points. One thing unique about hospitality is it's not just green investing, not just looking at the building, the infrastructure, and looking at building a green building. But hospitality entails a bigger part of green operations as well. So marrying the both of making sure you're sustainable, efficient, and in your building, but also when you do the day-to-day running of your property, we have to bear being operationally sustainable as well. The other 2 important elements of ESG beside green investing for hospitality, in my view, is also relating to, I would say, social investing or blue investing. So really social is a very big part of our ESG pillar, generating positive impact on the social in hospitality hospitality, considering things like supporting local communities where we operate, providing fair labor practices, ensuring diversity, inclusivity, and accessibility. These are all very important aspects of the ESG pillar, which is really on the social impact. And let's talk about is blue investing, which is really centered around sustainable use of ocean water resources. So for hospitality, where you have properties that are located near coastal areas, we do play a very unique responsibility in protecting the marine ecosystem as well. So really, in my view, the sustainable growth and putting emphasis on sustainability really is important and actually rewards those who actually put effort into it as well. So yeah, over to you, Alex.
Thank you, Siew Kim. That was very comprehensive. Finally, I'm going to turn to Milo just for some wrap-up comments as a member of the SIAS committee.
Thank you, Alex. And a special note to Alex, because I understand Joshua's roped you in, but you are in London and it's, I think, 2 or 3 a.m. So very kind of you to share your time and your passion with us. At SIAS, we really seek to watch out for retail investors, but we're also very heartened that a majority of our participants today are from corporates. And I think that's part of what Helga and Eric and also Siew Kim referred to, which is where this is about finding more about life for the next generation, speaking to retail investors and whether they're colleagues in this space or co-investors, we're all looking out for the next generation and making it meaningful and understanding what are the challenges and how we can lift each other up. So for me, I thought I would share that I come from a background of being a former regulator and a retired civil servant. And this space is interesting because it's how do you learn more? How do you execute investments with an eye on the governance and with an eye on sustainability outcomes? So TNC, the Nature Conservancy, also has an impact investing arm. It really works alongside different funds. It is 40 strong globally. It has a biodiversity and climate impact portfolio, 15 deals closed, 3.1 billion. Looking across the globe, of course, it's not fair to just compare with regional. It also has post-close deal management and a financial advisory and carbon finance advisory. So, this is an example of the ecosystem approach that Helge, you mentioned, because in Singapore, we have a diversity of thought. There is thought leadership in terms of how we can leverage global standards in delivering climate goals and not just to comply, but really to understand what is meaningful. And Eric, you were sharing that you have an ASEAN focus. I think for us, we can see the government has embarked post Minister Grace's COP Article 6.4 achievements. The government has embarked on a lot of bilateral agreements. And so under these bilateral agreements, I think the latest is 11 countries, and TNC has projects in 9 of those 11 countries. And so we have a presence here in Singapore. What is very exciting for me as an advisor is I can use my professional lens, which is with Albright Stonebridge Singapore office. You see the geography, the geopolitical considerations, you look at the G2G agreements, you understand the governments that are behind these agreements, the elections that are coming up or the elections that have passed, the administrations that will be enforcing these agreements. And that's all very exciting to see that intersection. So
good.
Perfect. Thank you, May. And sorry about that again, about the technical issue. And also, if you did type in questions before we cut out, could you retype them in just because we've lost them in the Q&A and I wouldn't want any good questions to go amiss. So thank you all for that presentation. We'll get into the discussion now. We're going to have some questions, and as I said, send in questions and we'll make sure to answer as many of them as possible. Helga, if it's all right, I wanted to start with you. And one of the things that you've spoken about in the past is the challenges of going from, as you describe it, the boardroom into the trenches. You also talked about some of the advisory stuff you do, that DBS does when it engages with its clients. I think one thing as well is that investors often see a large number of initiatives that come out of boardrooms, whether it's the clients you advise or whether it's DBS itself. And they can kind of feel a bit overwhelming. There's a lot of different acronyms, a lot of different targets. What should we be looking out for in terms of turning those initiatives and targets, I guess, into reality? And how have you been going about doing that at DBS?
Yeah, sure. Thanks, Alex. So this concept from boardroom into trenches could be both, could be within DBS and could, of course, be on the client side and how we interact with them. So if I, again, reflect a little bit on purpose, there is a new mega trend. Right? This mega trend is sustainability, and we're transforming our societies to accomplish what I described at the very beginning. And now let's get a bit deeper into this. So for businesses, this means there are specific risks and there are specific opportunities, and they are very different by sector. So if I give you one specific example, the electrification of mobility is a mega trend. And for example, we see a huge development on electric vehicles. Now, for companies in that sector, whether they are the big car manufacturers or SMEs servicing these car manufacturers, you need to actually be aware of the risks. So there are quite a lot of car manufacturers in the world that might actually experience a Nokia moment. They might simply cease to exist, and some of them are actually based in my lovely home country. So that is a real risk. Do I actually produce products and services that are fit for the future and actually are serving customers in this mega trend? And this mega trend really is quite clear. You know, the train has left the station. We know where the train is going. We just don't know how fast the train is traveling within this mega trend. So there is certain risks that businesses are exposed to. And then there's always a flip side. There are golden opportunities for these to service them. And again, this is true for the big, large companies, and it's very true for SMEs. We service a lot of SMEs like Eric and UOB does, in Southeast Asia, but also in, for example, India. And we need to help them understand these risks and opportunities. Now, you asked about this boardroom to trenches. You then really need to look a little bit under the hood of your customers or as an investor in the companies that you invest in. So how do these companies actually address these risks and opportunities? And there are a couple of key levers. One is a bit fluff, purpose and culture. How has this actually developed in the organization? Another one is governance. How do you integrate sustainability into everything that you do? It's not the icing on the cake, it's the cake itself. So you're transforming business models, and hence this requires a lot of integration and governance oversight and the processes within a company to address that. Then another area is you look a little bit at the ambitions of those companies that you aim to invest in. What are those ambitions and what are they doing internally and externally on this? Are they actually changing their business model? Are they changing products and services? Do they actually cater for capacity building? You know, there's this famous story where John F. Kennedy walks through the NASA building and passes by a janitor and he says, "Hey mate, I am John F. Kennedy, what are you doing here?" And the janitor says, "I help people fly to moon." So in every organization, everybody can actually support transforming the business. Is the company actually investing in that? And then how transparent is the company in updating investors on metrics and targets that ultimately serve the purpose to address the risks arising from this mega trend and reaping the rewards? And again, this is very different by sector and it's very different by country. We're going to talk a lot about the Asian narrative and the Asian context. But that is fundamentally, I think, what you need to look at. It's one thing to make a big statement in a newspaper that you're now going to transition to net zero. But what are you actually doing? What's your CapEx plan? How do you allocate money to invest into the future that transforms your business model? So these are a couple of key things that you really need to look out for. And I think transparency is key, right? For us as a bank, we need to engage with our key stakeholders, such as investors. And I can tell you, the questions they come from them, for example, on our climate agenda, become ever more technical. So it's not good enough anymore to say, I want to make the planet a better place. You really need to look under the hood in line with these things that I mentioned.
Okay, great. Thank you, Helga. Eric, I'll let you kind of respond as well and talk about this since it's similar. I mean, one thing that's interesting, I guess, about UOB is, as you mentioned in your remarks, it's very proud of its ASEAN heritage and the Asia narrative that Helga was talking about. There's incredible tailwinds. I think 60% of global growth in the next decade is going to come out of Asia. And so how do you see kind of answering to what Helga was talking about from the perspective of a truly ASEAN bank?
Yeah. So as we think about ASEAN, one of the things that's important for us to understand is in the developed world, folks tend to think of ASEAN as this nebulous concept of ASEAN. But us who live and work and breathe in ASEAN, we know that it's a complex matrix of regional coordination, but national different starting points as well as sectoral focuses that are different, right? So I think one of the things that's really important as we're supporting clients through the journey is we first have to respect that the commercial as well as decision-making environments in which they operate are not one size fits all. And the ability for banks like us to be able to provide the right level of context, sensitivity to the challenges they have, but understand the imperative for them to transform and to be able to balance the right kind of advisory and sustainable finance tooling, I think it's extremely important in creating that real impact in the real economy that I think Helga was talking about. So one of the things that's really important for us is to understand where they sit in terms of the value chain pressures. So if you look at a lot of companies within the region, they are not B2C or business to consumer type businesses. They're B2B businesses, right? And helping our clients to understand who within the value chain they need to be responding to and what kind of pressures their top tier buyers higher up in the value chain are looking for are the most practical ways we know how to work with our clients in getting them future ready, right? And so to Helga's point, staying at a high level, we need to be net zero 1.5 degree aligned by 2050. That doesn't translate down to products, services, operations, et cetera. We have to speak the language of, your clients are looking for low carbon products. They want to see how you're decarbonizing your scope 2 and what does that mean? Within your operations, you should be thinking about reduction, recycling, reusing stuff. And these are what we're seeing within the sector that your peer companies are doing. And then be able to bring that advisory to real operating levels, right? I love one of the points that Siew Kim made, which is beyond green buildings, it's really now bringing it down to operating level. And this is one of the other things I wanted to quickly share. If you go back to 2020, 2021, sustainability was at this ridiculously high part of the hype cycle, right? Lots of big words, lots of save the planets, like Helga was kind of alluding to, but not a lot of what do we actually do, right? Now in 2024, the good news is I think the unhealthy hype cycle is gone. And for those of us who touch real economy, real company operations, what we're seeing is beyond the hype cycle, there is so much real activity that's going on across the sectors in actual strategies and operations of companies, right? So that's kind of how we think about it as well.
Yeah, interesting. I also see that, I think, in the private markets where there was definitely a hype cycle in kind of fundraising, for example, and deployment in 2021. And now the focus is much more on sort of value creation, of course, because everyone's sitting on a lot of cash and nobody knows what to do with it. That's just the private market side. But I think in sustainability, it's the same sort of story. Yeah. Siew Kim, I'd love to turn to you now. One thing that Eric has been talking about was the not one size fits all approach. And I think one thing about Ascot, to see massive company, I think it's 200 plus lodging areas and lodging spaces spread across the world, spread across lots of different continents, not just Asia, but also Europe and North America. And you have a localized decision-making within the operating model. You have property sustainability champions, you've got country sustainability sponsors, and I think it seems like there's a real bottom-up culture there, one that kind of encourages the sharing of knowledge across geographies and properties, but it also enables a real kind of digging down into different geographies and what different geographies need for sustainability and what different property types need about that. And I guess I'd love if you could speak to that. How does that corporate structure really enable sustainability or other ESG goals in the hospitality industry, especially?
Yeah, okay. So Helga and Eric kind of talk about how, it means to not just talk, but really operationalize this sustainability that everyone is talking about. And that's what we have been doing. I mean, Ascott has been part of CapitaLand, and we have been submitting our ETS data for the longest time. And CapitaLand has been doing its sustainability report. But in the last 2 years, when I took up this role for the Chief Sustainability Officer for Ascott, it's actually a very different kind of lens and scope beside the real estate, really looking at the operational aspect of sustainability. It's really about the day-to-day. And kind of like what Helga said, it is addressing the risk, getting everyone involved. Because you think about it, you need to mobilize everyone in the company when it comes to sustainability. It's not just one department. It's not just a sustainability department. You think about it, for me, I have, we have 900 over properties. In my sustain department, we only have three persons, in the team as 3%. But we actually work with everyone in the organization in different departments. There are champions, and in different countries, there's sustainability champion that's driving sustainability. So it's really about, getting everyone involved for them to understand what our Ascott Cares framework is about. And at their local level, every country sets up a sustainability council or champion that is headed by very senior people in the country. So it's usually a country GM that is the sustainability champion. And that framework kind of guide our local team on what they need to do to drive and achieve some of the goals that we've set. A key part of our, driving and encouraging this model is on empowerment. We empower our local teams to make decisions. They set up their own country sustainability council that drive some of these initiatives. And the reason is really because the local teams are more familiar with their own regulation, their own supply chain, their community expectations, and really for them to choose what is the most effective sustainable solutions for their operations. So that is key. The other part is also about knowledge sharing. So once every 2 months, our global team will come together. On average, 500-600 people will log online. And what we do is we really share, some of the initiatives that's been done by a country, and it allows a lot of cross-country learning. And this bottom-up culture really encourages the sharing of knowledge across properties, across geographies, and allow us to kind of transfer successfully the sustainability practices from one location to another. So for example, a property in Asia might implement a very innovative energy saving technology in its property. And this knowledge is shared to, the properties in Europe. And we've seen that sharing kind of being very effective in, first, of course, encouraging our properties to know that, hey, someone else have done it, so we can do it as well. So that cross-sharing is very, very powerful. And we've done that for the last 2 years. And a lot of practices have been adopted through that sharing. The other point is also on being decentralized and localized is about respect for the local communities. Hospitality is a very local, in a way, business. And having that localized decision-making, having that culturally sensitive and addressing local community is very important. And we allow our properties and country to do that as much as possible. And the last point really on sustainability mindset, like what Helga said, getting everybody involved is pretty amazing, and it's really about a change mindset. when we had developed the Ascot Cares program, everybody now know what they need to achieve, what they need to do. And it's also, one thing exciting about sustainability is not about work, because everybody finds that it's a very purposeful, meaningful thing that they do. So having that sustainability mindset promotes really a very strong sense of ownership and commitment to a shared goal among our employees across all different levels. And where I feel employees, they feel responsible for the success of the sustainability initiatives at the property, it means a lot to them. So I guess really this localized decision making, while we are tagged on to the broader framework and guidelines, is very powerful for us in enabling a lot of initiative being escalated at the property. Really, it is a journey. We are not there. We all know that we'll never get there, right? But it's really about starting the journey, getting everybody together, and making that positive and creating that positive impact. And it's very powerful. Yeah.
Thank you for that, Siakim. Thank you. I now want to turn to May. I mean, one of the things that I've also seen, I think, and we've all noticed in the sustainability world, we're talking about a kind of whole ecosystem. There's been an increase in the number of organizations that are now partnering with businesses to support their sustainability journey or the transition in general. You mentioned some of them in your introductory remarks, and you've previously worked for and currently do work for some of them right now. In the spirit of, I guess, talking about this ecosystem, what are the roles really of these organizations and the kind of broader initiatives, I guess, that businesses increasingly partnering with, and how can they best enable businesses to advance on their sustainability journey?
So just to clarify, I don't work for Nature Conservancy. I'm their senior advisor, which is a volunteer role. But
yes, sorry, I mean involved with, that's what I should say.
Very happy to be involved with them. They are a science-based organization. I would like to steal a few phrases from Helge and Eric just now. Under the hood, icing on the cake. And I think being involved with TNC has helped me ask questions that are science-based, that are under the hood, that educate the investor. The very idea, the visual concept that Helge, you introduced just now of, we all know the train has left. We just don't know how fast it's going. Oh, is that Siakim? I'm sorry. But that idea is how do we answer that? We answer that by being, as investors, ultimately, we're passive and we need to ask questions. We need to ask questions about how companies account for impact. How are they designing, as you mentioned, Helge, in the business model? And Eric, I think you made a reference about the sustainability reporting. I wanted to say that science-based targets, evidence-based targets are so critical to reporting, and that's what reporting with transparency brings us up to as a market, to be able to identify the whole value chain of products. I know there's a huge range and an increasing diversity of bonds, green, blue, gray products. But as investors, ultimately, it's what SIAS has always been focusing on, which is the corporate governance of those business models, the governance behind what you're reporting and how you're reporting. And so I would say at TNC, the great benefit, and at other global organizations like Conservation International, WWF, the access to science and tested science has been so important. It enables nonprofits to work with businesses to set the right sustainability impact frameworks, to have a roadmap towards achieving 2030 goals, 2050, and have relevant implementation strategies. So I think to be really successful, it is important to engage with all parties in this ecosystem, have an ecosystem approach, and then it will educate our impact and reporting processes. You know, in looking ahead beyond regional, we need to be aware of the global pressures, like some complying with European SFDR Article 8, 9 classifications. there will be many more numbers to come and maybe many more digits. But I think if we have a diet and a sort of gym regime of always saying we're going to refer to the corporates, the leading corporates, and the leading corporates will always refer also to the NGOs, the intergovernmental organizations. I mean, I see Bloomberg has just published an article by, I think, the International Finance. I think it was an IIF article, research paper about how banks are coming together to say they're not the only ones responsible for this green transition. And so for transition finance, how do we regulate around it? I think that's a conversation to be had with governments also. So a lot of opportunity for collaboration across public, private, and philanthropic capital.
Maybe I just add on to what May shared about sustainability reporting. I think it's important to note that no one will ever get there, but I think it's important that as an organization we set a target on where we want to go, and science-based is definitely an evidence-based kind of target, but targets across the different sustainability goals that we want, and then preparing a report that shares with our stakeholders, be our guests, be our investors, be our lenders, on how we have, how have we get there, where are we now, and how are we going to get there. When we started the journey about 2 years ago, this is our second year issuing an Asset Cares report. The first year we were kind of actually we have done quite a bit, but we are still not there yet. But we decided to just go ahead and issue the report and just give a progress going on what we have done. And I think the stakeholders really appreciate that. They are not expecting us to achieve everything in one go, but they know that we are getting there and what our progress is. So I think from a reporting standpoint, I think it's important, like what everyone was saying, so that the stakeholders know what the organization has done and what they're going to do. Yeah.
Thank you, Sukan, for sharing. I want to switch gears a little bit and talk to something that May briefly mentioned about products and kind of the product side of it. And Helga, I want to turn to you. I want to talk about the product side, about what DBS is offering, not just the advisory side, and also perhaps the link to transition finance. You mentioned that there's been an increase in sustainable finance transactions, not just in sort of volume, but in terms of the range of products that are being offered. We're seeing different types of bonds coming up, different types of ETFs coming up, different types of equity investments, etc., different funds as well in the private markets. I was wondering if you could speak to that and the journey DBS has been on. And the reason I bring in transition finance is because I think it is something that perhaps you personally or as an organization have become increasingly interested in. I think it's also an area that's very relevant to the Asia narrative that I think is overlooked probably by the West, because a lot of the systems that kind of need the big transition money have kind of already happened in some way. And so there's less of a focus on it perhaps. And I think there's also a lot of challenges to it, because in many ways it creates a bit of a black mark on your ESG reporting card if you've got to hold on to that dirty asset a little bit longer in order to enable a transition, which can be a huge value add, can be a massive boost to our journey in sustainability, but doesn't seem to be getting the amount of money and attention it perhaps should be.
Yeah, absolutely. So transition finance is a term that Eric and I probably dream of very often these days, because it's discussed left, right, and center. So let's first define this a little bit. And I mentioned to you that I'm a very simple person. So if you look at our economies, think of it as a traffic light in terms of the economic activities we're doing in this. So there's green activities. This is stuff that is already very clean today. Think of electricity generation by renewable energy. We need to do more of that. It's all clear, we double down. On the other side of the spectrum, the red, or you might call it brown or whatever, you have activities that will never become green, no matter how much love and money and technology you throw at it. Think of electricity generation by coal. We know we need to stop it. The question is, how do we do this credibly and fast enough, taking into account socioeconomic parameters as well. And then you have this huge area in the middle, the amber or orange part. And transition finance ultimately, holistically, touches upon everything that allows us to move the entire society into the green space, taking into account, again, the Asian context and socioeconomic needs that we have in the region, and so on and so forth. So think of sectors like the production of steel, cement, mobility, many other things. And this ember is almost everything in our economy. There's a very interesting number. So Europe is often labeled as the leader in sustainability, which is something we could discuss as well. But the banks over there recently produced what they call a green asset ratio. Simplistically put, what are my green assets on the book divided by my total assets? And that ratio is 2.8% in Europe. So the message is close to nothing is green. It's a very small part of our society. So we need to address this huge ember part. And again, this is different by sector. And we need to help, again, the large corporates as well as the SMEs servicing these large corporates. So let me give you a specific example. I love Singapore for many reasons. One of the reasons is that we are very strategic, forward-looking, and focused on getting the job done. So the other day, and Eric is involved in that as well, we call ourselves the Singapore Sustainable Finance Association. We did a simple thing. We simply asked everyone in a specific sector to come into a room and talk with each other. And we started with real estate. And everybody was there. There were the big real estate companies. Of course, Capital Land was there, but also CDL. There was the regulator of the real estate companies, BCA, the Singapore Green Building Council, and then those that provide capital, banks, asset managers, and our regulators. And we first listened to the real estate companies. What is actually holding you back from transitioning? What are the key issues? And we derived specific action points out of those, and some of those have nothing to do with finance. So that's also, again, a realization that financial institutions are critical, but are not sufficient to actually transition. So I just wanted to leave that with you on how we can actually design collective action very specifically, not just talk about it, but specifically. And one action point relates to SMEs. They typically don't have the financial or human resources to actually address all of this. So we need to help them. And there are specific programs that also UOB and us offer in various countries to really hold their hands and help them in their journey, because what they're focused on is having a strong relationship with the large companies and stay a critical pillar in the supply chain. So here I have an example, very specific in the real estate sector, of how we do this. Now, yes, there are quite a lot of new products in finance that we can do. I'm personally not too fussed about labeling products. I'm more focused about getting the job done. So I'm quite excited about getting the whole ecosystem in a room and talk about problems and see who can address what challenge, right? Who actually has to do a job. But you are right that there are new financial instruments. You mentioned, interestingly, coal. So this is now also one of these big themes right now. We have 5,000 coal power plants in Asia Pacific. How can we switch them off earlier, ahead of their operating life, in order to achieve Paris goals, but do that in a just manner, right? Taking into account the socioeconomic considerations of the countries they are located in. And for example, there is a new financial instrument that doesn't even exist yet, but we're working on it. We call it transition credits. So that allows actually capital providers to participate in this. And I'm not going to go into the details of this because it's a very niche topic and it's very complicated. But it's a new form of capital that facilitates people to put money on the table and join forces on this. Ultimately, I think the world simply has to come together and agree on certain things. Like the world has come together and agreed on what is green. And that actually facilitates product development, innovation, and also the unlocking of capital. The world has not yet really come together and agreed on what is a credible transition. And that's the crux of the matter. So I don't really want to label products too much. I would rather stress that we really need to agree on that. And I come back to the notion that Eric and I have now mentioned many times. We need to create an Asian narrative. So for example, when we were all sitting in this room with the real estate sector, we all agreed that the pathways that we see from global organizations don't work for Singapore. And they also don't work for other countries in this region. So as an ecosystem, we will simply put a flag into the sand and agree on what we think is a credible pathway. And then communicate this pathway to other stakeholders as well. So I think that's the crux of the matter. We need to agree on what credible transition actually means. We're going to create an Asian narrative. And then on the back of that, there are going to be products. I mentioned one or two, but that's then more the downstream part. Let's first focus on agreeing on something, getting the ecosystem into the room.
If I could just jump in there, thanks very much for that. I think that problem statement, that articulation is critical and very helpful. I will give you an example. The other day I was in a climate law conference, and it's an ASEAN where regulators were present and law schools. And one of them, someone from the ASEAN Energy Secretariat, used the term clean coal. Right, so the chief sustainability officer of a European MNC that will remain unnamed jumped up and spent 5 minutes asking what is clean coal, right? And that reflects that statement, Helge, which is what is just transition. I think that is a great articulation of it. Thank you so much.
Thank you for that, May. I want to turn to Eric now. Maybe, Eric, you can speak to some of the things that Helga said. I think also one thing I would mention is I know that SGX is working on their own taxonomy. It's not just the EU is not the only player in the market, as I'm sure we're all agreeing upon. And one of the things they're trying to do is by categorizing it in that traffic light system to try and figure out ways of enabling a just transition by making sure that the amber category is getting the capital it deserves. So anyway, that's just an aside, but Eric, over to you in terms of how you see the kind of transition, how you see building that Asian narrative, and how do you see constructing the just transition from the perspective of UOB?
I'm pausing and I'm thinking hard about something. I'm going to contextualize it in this way, right? I'm starting to realize that as we talk about transition finance, etc., one of the things we risk doing is losing the audience in terms of big jargonish words, right? And one of the things I think we need to reset a bit is when we talk about transition and transition finance, there are almost two levels at which we need to operate at. One is a very G2G region national strategy level of how we talk about transition and transition finance. And this is where, our audience may have heard a lot of these clean energy transition type conversations, right? How we go from coal and oil and gas to renewable energies, etc., etc. That is very important, right? That is largely the work of governments coordinating amongst themselves, figuring out the energy mix strategies to ensure it's reliable, affordable as they decarbonize. There will be large companies that get involved in that work, right? Helga and myself will finance together with other players and the government some of these big projects. And that's one level of transition. It's very big, expensive, G2G blended finance, transition finance type stuff. But the second level where we need to talk about transition, and I really like how Helga kind of gave that example, right? European banks, when you look at how much of the stuff is green, 2.8%. The rest of it is every other bit of the real economy, be it logistics, travel, built environment, food and agri, consumer goods, whatever it may be. And the very fact that every single business model, right, has built itself on a high carbon economic model and has the opportunity to figure out its own unique pathway towards a low carbon economic model or business model. And this doesn't only, consider the big coal-fired power plants and renewable energy systems, but could be something as simple as if you're a manufacturing company, you need water, you need resources, you need labor, you use land. How do we help a client think of their business model today in a progressive but pragmatic way? So what I mean by progressive is asking a simple question. Dear manufacturing business, in 5, 10, 15, 20 years, when the demands of low carbon or net zero are your baseline, is your business model fit for purpose for that low carbon economy? And if the answer is You have a strategic plan to get there? How can we finance your transformation? If the answer is no, then please figure out how you will transform your business model and let us help you get there, right? And if you think about transition finance, transition in that context, one of the things you begin to realize is many companies within our ecosystem, many of our audience members here may actually already be doing that work, right? But they do it using a combination of conventional finance, sustainability-linked financing, as well as what Helga talked about, which is green finance, right? So one of the things I think that's really important is we need to make very accessible, very practical what we mean by transition and what we mean by transition finance. Now, yesterday, I was in a closed-door session with the Malaysian Minister for National Resources and Environment, and we did talk to him about the importance of getting transition finance right at the country level, at the region level, but there's G2G work, right? And now, if we at a governmental level get this right, I can tell you what the huge prize is in terms of finance flows. Today, if Helga and I print a transition finance deal, we will find it very difficult to issue a transition finance bond on the back of that, accessing the European and American capital markets. The markets there, they want green finance, they want sustainability linked, but they're very cautious of transition finance. And the challenge there is we do not have a consistent definition of transition finance globally, kind of what you alluded to, Alex. And there is a huge level of suspicion. If you print transition finance, is it low quality? And what happens if the transition promises don't come through, right? And now, if we get transition finance right, banks like DBS and UOB will be able to unleash our balance sheet at scale to finance transition and be able to turn around and access the deep capital markets of Europe and the US. And think of this omnibus capital flow from the developed markets to developing markets. So there is a huge price for getting it right, but I suspect for a lot of our participants on the call, that work is not what they'll be keenly interested or connected to. It's really transforming our business models, right, in our own relevant industries to low carbon economies.
Maybe I'll just add on to that. I mean, also just put things in perspective from my industry and how that kind of flow down to me. I mean, looking at our portfolio of assets, we are not even talking about net zero yet, while we have set a target, right? Really, right now, we are looking at our own portfolio of assets and setting a target on at least getting our portfolio green, getting ourselves certified in terms of green, be it LEED, be it age, getting our real estate in order. So we have set a target of 50% green certification by 2025, and we've done that. But there's another 50% to go by 2030. A lot of work actually needs to be done for us to even just to get our green certification, and the gap analysis, a lot of work. And for us to get to that, doing all the gap analysis, even without talking about finance, the cost actually can be prohibitive. And if you think about putting all the capex to just green it, sometimes the cost of capex costs more than the building itself in certain cases. So then you think about, what are you going to do about it? You're going to retrofit. I mean, at the end of the day, all building owners, all investors actually needs a payback and returns, right? So there are practical issues with regards to that. And it's a journey that we need to go through. In our case, if we have set a target that we need to get certain things done, and we find that eventually maybe the returns doesn't justify the cost, is a decision that we need to make as an asset owner to kind of maybe sell the asset as well. So really, it's a journey and a tough decision to make. Yeah, it's not just about finance. I mean, if we don't have to pay interest, maybe that'll be nice. But the returns and the financing costs, I mean, in the beginning, when we started off talking about, sustainability linked bond, there was a concept of greenium, where if you go out, you know, you get better financing rates from the banks. If you are green, you're trying to green a property. But now, I mean, that concept is really not there anymore. There's lots of capital to be tapped, yet, you know, we are not seeing a very preferential kind of rate for us to green our portfolio. I mean, that's my practical sense of execution.
Yeah, just one thing I wanted to circle back on. I think this is something that you can mention but Eric, you definitely mentioned this as well. It sounds like there's also a problem in, I guess, the incentive structure for investors in that because we don't have this a good definition of just transition, because we don't have this good definition of sustainability, capital isn't going to where it should be going, and instead ends up kind of getting pulled into the US, Europe, and stuff like that. I think that's definitely a challenge that Asia are experiencing. So is that kind of where the problem, one of the main problems lies, is that incentive structure?
So let me jump in real quick there. I think it's less of an incentive structure. It's more of understanding and risk management issue. So I'll share with you. Yesterday when we were with YB Nick, Malaysia is going to be the ASEAN chair next year, right? And one of the things he was lamenting was we're not getting enough of the developed markets flow of funds into this part of the world. And one of the things we said to him was, as you take on the chair for next year, why not consider bringing a global organization like the IEA, the International Energy Agency, and working very closely with the ASEAN Secretariat, with each of the countries? Because one of the things I think maybe it was Helga who mentioned is we need to have that global credibility to our local plans. And sometimes the developed markets recognize what they recognize as credible, right? And if you get an IEA that's working with the region, working with the countries that say, these transition plans are high quality, they're executable, and they're aligned, right, to getting to net zero by 2050, 2060, you know, pick your date. I think it makes it easier for the developed world institutional investors to be able to then look at that and say, okay, I see a mark of credibility that is co-created together with the decision makers of a country or the region. And now we dare to open up our investment portfolios to this class of transition finance for this kind of transition assets, right? So I think that's part of what we need to crack. And certainly at every possible forum where we talk about transition finance, you'll find Helga, myself, nagging almost, right, at anyone we can get our hands on to help get that regulatory, national strategy, global reputational sorted so that we can get transition finance flowing.
Understood. Thank you. We've just had a question in, and May, I'll let you answer this first, and then any other panelist that wants to come in, please do. It's about the circular economy, and this is something that, you know, has gained traction, especially on the commercial side, retail, but also as we're talking about batteries and kind of the sustainability world as well, the idea of how to make sure that our transition to sustainable doesn't leave us with products that can't then be adequately put back into a sort of circular economy, so that we're not over consuming. May, how do you see the future of this development in a kind of circular path, the emphasis on making sure that everything can kind of be upcycled again, and perhaps where Singapore or ASEAN sits on that journey?
Well, thank you for that. And I can't see the actual question. Oh, one important lever of a low carbon economy would be, okay, I see it now. Treat end of life. I think the same question exists for a lot of the emerging products, and that is the research that's behind it and the science behind it. We have seen that issue being addressed in Korea extensively, with a lot of the Korean chaebols engaging with global NGOs on this aspect of the research. And as you, I think, might have noticed from the papers, there was a recent incident where Mercedes vehicle exploded in the car park, and that caused 30 vehicles to also be damaged. So it is a real issue, because they have not been able to address that. And that's part of knowing that this train track and not knowing when we will arrive at that, but I think we will. There is enough capital behind funding this research that will get there, and a lot of universities around the world that are competing to find that solution, the holy grail.
Maybe I'll
Great,
just
thank you. Yeah, go ahead. Go ahead.
On the point on circular economy is a big part of what we look at, especially at hospitality. There is actually quite a lot of waste being generated, at hotels, right? One of the things that we look at is actually food waste. And that's really big. In fact, recently in this is in Singapore, at one of our property, we installed this what we call a food waste treatment by Life Lab. So it's a Singapore company, a technology called Life Lab Resources. You go and research it. And that's really circular economy in motion, because what happened is the food waste at the restaurants taken into this waste master treatment that kind of reduce the food waste by about 80%, but it also produces certain kind of protein. There's a lot of science to it, certain kind of protein, which is then converted into a fish feed, which then the fish feed takes it, produces waste, which goes into feeding the plants. And there is a metro farm in Singapore, actually is a commercial plant that actually takes that nutrients and produces vegetables. It's all aligned with Singapore vision, right, of 30-30-30. That circular economy is very amazing, from a waste back into the table in terms of producing the plant. So yes, it's a big part of what we look at, reducing waste, but creating new resources as well. The other thing that we have waste is linens. As you know, in hotels, there's lots of linens being used and disposed. And that again has got its own story of how we recycle and technologies being used to reproduce and new materials out of the linen that's being disposed. So yes, it's a very big part of the economy, reducing the waste and reusing it into a new form. Yeah.
Alex, I'd like to jump in on this one. So I think circular economy, like May and Siew Kim have talked about, within Asia has huge potential that can be unlocked, but isn't fully unlocked yet. And for many of us, as we look at what the problem statement is, it's very clear part of it is regulations, right? Do we have the right kind of regulations within each of our countries and economies that encourage circularity rather than simply go with virgin materials as the easiest and cheapest way to drive our economic models? And when we travel to other countries, Japan's a great example, Europe's a great example. I just came back from Canada, Vancouver, a month ago. You can see how circularity driven by kind of city or government regulations is very embedded into the daily lives of citizens as well as businesses, right? So I think one of the things we need to figure out is the right kind of regulations that work to encourage circularity, because and it's going to come for us very, very soon. All of us, including our audience, will know that over the last few years, we'll focus a lot on climate, right? Now, one of the things that's now coming into the sustainability sphere of awareness is nature and biodiversity. Now, this looks like a new topic, but many of us know nature and biodiversity is actually a new old topic, right? We've always instinctively understood nature and biodiversity was something we had to protect and make resilient and make regenerative. Now, a lot of people think that nature and biodiversity largely only affects the agricultural sector, et cetera, et cetera. But as the requirements of nature and biodiversity start to come down value chains, the circular economy the concept of reducing the virgin materials and raw materials you use, reusing and recycling, these are things that's gonna really start to infiltrate our value chain. So how we take care of water usage, water efficiency, how do we manage waste and pollution, like what Siew Kim was talking about, how do we recycle the EV batteries and the raw materials within those assets, similar to what the question was asking. These are going to be the big questions. So for any of our audience here, as you're thinking through circularity, it's important to understand, I think, three things. Number one, in our value chain that you operate in, what are the key raw materials, right, or key circularity concepts that are most applicable to you? Number two, where do you think your value chain buyers are going to come under pressure, and that pressure will be transmitted down? And then very practically, what are some of the reduce, reuse, recycle initiatives you can start on already that make commercial sense, that save you money, right? Just by lower operating costs, and just to get those circularity muscles moving and going.
Yeah, my number one preference is to, of course, reduce within our operations. We look at really reducing, cutting waste, and removing the single-use items at our amenities is something that we look at. And actually very interesting. Just a few years ago, we were looking at removing the single-use plastic bottles that we put in our rooms that we always expect when we check into the hotel room, and we want to remove that. And that was like a few years ago, yeah, when this sustainability thing is not like a big thing. And when we talk properly do that, they say, oh no, the guests will complain, and when there's no bottled waters in the room. So we decided to remove it. And yes, some guests do complain. But the funny thing is now, fast forward 2 years, if I put a single-use plastic bottle in certain countries, yeah, in a room, some guests may complain to me, why are you using single-use plastic bottles? So, the mindset of the guests have changed. Our guests are now more eco-conscious. So really, I've seen how times have changed, and how our guests have also moved along as well.
Perfect. Thank you for sharing those thoughts on supply chains. Helga, I'll leave the final question with you and to have your say on supply chains. I mean, one thing as well that I think we're noticing is that companies are about to experience a big shock. It's going to be a long, drawn-out shock, but there's going to be a shock to potentially a lot of supply chains from the climate side. On top of that, you have the geopolitical shock that's going on and the kind of decoupling. You saw that in COVID. You see that going forward. Singapore's in a very unique position in terms of sitting kind of within different Venn diagram bubbles, I would say, between different spaces, and also trying to advance sustainability and sort of securing supply chains. You obviously must be advising a vast range of companies across vast different parts of the value chain. You talked about mega trends. Are there certain mega trends you see on kind of a global supply chain point of view, given that these sort of trains, as you said, are already leaving the station, and it's a question of just how quickly we're going to get there?
Yeah, thanks for this. So there's so many mini mega trends. So let me maybe, rather describing all these mini mega trends, explain the approach. So when we talk about supply chains, we very often talk about SMEs, right? So to some extent, Asia is almost the scope 3 of the world. And there are so many SME customers that we are all serving. One realization, again, is that these SMEs are completely overwhelmed by all these megatrends. It's hard to understand. You don't have the financial or human resources to actually learn about it, let alone implement anything. And number two, they're really under increasing pressure, not necessarily by regulation, more indirectly, but really by the big MNCs, right? So the big MNCs have committed, for example, to reduce scope 3, and then they call their SMEs and say, hey, you need to do something, and they're really overwhelmed. So that's the context. And I stress again, SMEs are the backbone of our economy. They're typically 90+% of our GDP. So we must help them. It's an imperative. And there are a couple of ways of doing this. One thing is that we realize we are a bank, so we are quite good at certain things and we're not so good at other things. So we create ecosystems. And let me give you a few tangible examples. Here in Singapore, we work with Enterprise SG, and there's kind of a structured journey for SMEs where actually they can tap off government money. Don't we like free money from the government? Where there's an ecosystem of people that can help them with technical analysis. Where are you today? What can you actually do? And design a bit of a roadmap for them. And they can actually get 70% of these upfront costs offset by government money. So creating an ecosystem where we complement what we as a bank can do with either technical advisors or those that provide the actual solutions is, I think, quite critical. We did the same in India, where we work with H&M. We probably all have an H&M product in our wardrobe. And H&M wouldn't necessarily care about DBS so much in the home markets, but we told them, well, we bank your entire supply chain in India. Can we actually work together? And we created a program where we use technical advisors that, again, do the analytics for the SMEs, and then we are providing financing on the back of it, which helps the SMEs to foster strong relationships with H&M, which is the only thing they're really interested in, to keep the business running and make it fit for purpose, ultimately, acknowledging the pressure points. We did something similar in Hong Kong, where we work with a CLP. It's a utility where CLP does the energy audit and they provide the hardware, and we are buying racks and ultimately financing this for the customers at fairly attractive rates, but it still makes sense for us. So I think my big notion is there are many mega trends. SMEs need support, and quite frankly, just explaining to them what it is and what is scope 1, 2, 3 is not doing the trick. What is actually doing the trick is really helping them implement this. And for that, you need different people, because different SMEs have different problem statements. And banks alone will not be able to do this. And I very much also like Eric's point again on regulation. Might not be in the form of regulation, but Singapore, being very strategic and forward-looking, has actually created grants and so on and so forth to support SME businesses. So then Eric and I can come in together with other partners to help them. So that's really the approach. We must tackle it. It's an imperative. And the MNCs are increasingly putting pressure on the supply chain. So we really need to help our customers there.
Perfect, thank you. I'm glad to hear that SMEs are getting the kind of recognition you deserve. As you say, they are the backbone of every economy in the world. So we're almost out of time, and I want to give a bit of time for all of our panelists to give a bit of their closing remarks, maybe just a minute or so of things that they've reflected on in this discussion, or perhaps things that haven't been mentioned yet, but they'd like to mention. Helga, given you just spoke, I'll start with you, if that's all right.
Maybe a completely different point. There are a lot of people in the world, and that's academics, educators, engineers, architects, bankers, that do a fantastic job in sustainability. What we're all really bad at is communicating the purpose, the why of our work. And I think it's really important to get the broader support from the community at large. If you look at the world, it's quite shaky at the moment. And actually at board level, you very often now hear questions like, is there a stepping back on sustainability commitments? Do we need to adjust? Are we moving too fast? You look at elections in the Western world that are impacted by many things, but among others by a cost of living crisis and the associated questions on climate commitments and so on and so forth. So it's a very volatile world. So one thing I've been thinking a lot about is how can we actually explain all of this easier so that we make sure that the community at large actually continues to support our efforts? Because otherwise, Eric and I and Siew Kim and May, we keep talking about those that are already converted, but we do need to actually get buy-in from 8 billion people so that this is the right thing to do. So creating the right narrative, breaking it down, I think is critically important. And May reference, for example, one recent case in the electric vehicle space, and one battery exploded. It's actually quite amazing how the merchants of doubt are using communication strategies to create doubts among people that this is the right thing to do. They're very powerful, and they're unfortunately better at this than us sustainability people. So I leave that thought with you. I think it's a huge responsibility for all of us to explain it in a relatable way. There's a specific person in the US that seeks to get back to the White House, and he simply says, You pay more at the gas station because we do too much renewables. It's a one-liner. Everyone relates to it. It's directly relevant for every person. I haven't yet come across a sustainability person that has a counter one-liner that relates to people. And again, it's a long-winded message to say we must not underestimate the importance of taking everyone along, of getting the support from the community at large for everything that we do. And I'm sometimes a little bit concerned that we don't focus enough on it.
Perfect. Thank you, Helga. Yes, big challenges, but hopefully we can meet them. Eric, I'll let you do some final remarks as well.
Yeah, I thought it would maybe be helpful to share two of the guiding principles we use at the bank when we were charting our sustainability strategy as well as building our various products or responses and initiatives, right? The first principle we used was, and it's our guiding principle for sustainability, we need to be progressive but pragmatic, okay? And the reason we chose progressive but pragmatic as the guiding principle is the progressive lens pushes us as a board, senior management, and the entire organization to put our minds in a future orientation of what the future needs, wants, and helping us prepare ourselves as well as customers in that future orientation for the future. And it's a strategic part of the sustainability response. Pragmatic lives in today and the near future's world to realize that while we can throw our minds in future orientation strategically into the future, we need to do all the practical things that make sense today in order to progress towards that future. And that constructive tension between being progressive but pragmatic, being future oriented but feasible and reasonable for today, forces us as a bank to find the best balance of solutions that are most relevant to our clients. So I want to share that first principle with our audience. If you're struggling with, do I move? Do I not move? What do I do? Right? That's how we at UOB create that constructive tension. Right? That's one. The second principle we use is stakeholders, stakeholders, stakeholders. And I'm going to say it one more time, stakeholders, right? In each of our business models, we have stakeholders who matter. Sometimes regulators, sometimes clients, sometimes investors, sometimes employees, sometimes customers, right? And that interplay of what our stakeholder demands and expectations are is very important for us to be sensitized to be able to read, not when it hits us, but to read it ahead of time so that we have the ability to respond. I love Siu Kim's very relatable story. 3 years ago, you take the bottles away, everybody screams at you, I need my water. Today, you put the plastic bottles there, you're not a sustainable hospitality player, right? And so, being able to read the stakeholders, where they're going with this, gives us the maximum time to be able to prepare. So I thought I'd share those two thoughts with our audience and hope that's helpful.
Perfect. Thank you, Eric. See you, Kim. What about some final short remarks from you?
Okay, so I guess being in hospitality, I would like to end on a happier note. I guess I'll end with this point on being net positive hospitality. Really focusing on creating a better world, but really focus on giving more than we take. We all travel, yeah, we all love to travel. So it's really not just about minimizing costs at our organization. We all know that travel tourism actually plays a very vital role in a global economy, maybe accounting for some countries up to 70% of GDP. But it also generates significant costs, including emissions, biodiversity loss, inequality, and some maybe informal employment, right? So shifting this mindset into a net positive model really means that we actively create a positive impact on the environment and society across, our portfolio and supply chain while minimizing costs. I think the last point is really, we have talked so much today and we know the challenges. There is no silver bullet, but we will continue on this journey. Together like together is a key word. Even without the regulators coming after us, I mean, with them, it make us go faster. But without the regulators, let us all focus on creating that net positive impact. And really by doing that, you know, as an organization, I believe we will remain sustainable in the long term. Yeah.
I'll make it quick. I think governance is part of the cake, and I hope that we can have that icing and eat it.
Short but powerful. Maybe that's the communication strategy we're looking for. Thank you all so much for coming to the panel.